All right, module 8, y'all made it. Let's blow through this, okay? All right. Investing versus trading. Understand your personal strategy and how both methods will work. All right. They work together. I'm going to tell y'all right now, real quick, before we even go in here, I utilize my profits to invest in my long term account from trading because they want 37% from you as far as gains, depending on the area. But I want y'all to understand something. I just flip it into long term investment so it's less taxable. All right. Mindset differences. Investing long term ownership. Listen, when you invest long term, you're placing your money there for 3 to 5 years for it actually to work for you. All right. So don't think you're going to place some money inside of a stock and take it out tomorrow and be rich. Do not think that. Warren Buffett said watching the stock market is like watching paint drying. Okay. If the paint may be beautiful at the end, but it takes a while for it to dry. All right. Different emotional demands. Listen, trading is a short-term opportunity. I don't care if the market goes up or goes down because I can make money either way. Remember, if I'm making a call, I'm saying that the stock is going up. If I'm making a put, I'm saying that the stock is going down. If I'm making a buy, I'm saying that the stock is going down, up. If I'm making a sell, I'm saying that the stock is going down. As long as it goes in the direction that it's supposed to based off upon my entry, I am now making money. All right, investing, stable, compounding, slower. Listen, if you want long money and wealthy money, you should have a long-term investment portfolio. I drop $10,000 in the market every month, y'all. It's mandatory, okay? Not just for me, but for my children as well. But you can trade because it has faster results, but it's more screen time. But you can utilize those profits to actually place inside of the long-term investments, okay? Long-term supports, short-term investing gives you a financial cushion. Listen, long term, it's like having a bank account that you can liquidate. Here's a play that I use too is I put the money inside of the long term account with Charles Schwab, and then I borrow against it and put it in because it's non-taxable, and then I put it in other things that's going to make me money, right? Because I still get to keep my equity inside of the stocks as long as I pay the loan back. Helps you trade with less pressure. It's a fact. Long term investing, I mean, it's less pressure. I got 3 to 5 years for it to actually happen. Passive income and growth. Listen, have them pay you in equity, right? And when I say have them pay you in equity, what I'm telling you is if you have a dividend stock, meaning a dividend pays you out because you're a part owner, just have them pay you in shares and don't have them pay you in money because you're going to be sitting at there 3 to 5 years anyway. Why not get an extra couple shares based upon you being a part owner? All right. Portfolio basics, diversification. Listen, some years medical field is up, some years oil field is up, some years technology is up, but understand that you have to move the money for it to grow more. All right. Don't sit in the stock because the company is losing and you don't know what to do. This is what the community is for. This is what you'll be trained for. So let's rock out like that. Stocks and ETF mix. I want y'all to understand that stock is just a company and ETF is a variety of companies. So for example, QQQ or the NASDAQ is the tech sector, and then I want y'all to understand the S&P 500 is the top 500 companies inside of the US. And with this being said, these ETFs are like variety bag of chips. If a company is not performing, they can actually remove them outside of the ETF. The average return on investment of S&P 500 is 11% a year since 1957, and I believe since the past 10 years it's been 12%, and then the last 5 years it's been 15%. So if you want to invest safely, this is not financial advice, but if you want to invest safely and grow your profile long term, something like the S&P 500 or the correct ETF should work in your favor. Balancing risk in your account. Don't put all your marbles in one company. Don't sit right here and drop 100,000 on Nvidia. They can crash. Don't sit right here and drop 100,000 on Apple, although Apple is my favorite company. But what I'm saying is don't put all your eggs in one basket. All right. Identify your fit. All right. Are you more patient or hands-on? Define your goals and income growth for both. Blend strategies to match your lifestyle. Y'all, I listen to other traders who trade different from me. We're all getting money. Some people actually help me with some strategies. Some help me tweak my strategy. I help them tweak their strategy. It's a mindset thing. Stay in the rooms with other traders. Communicate with other traders. Don't technically switch your strategy. See what works for you. See if you're a swing trader, a day trader, a leap trader, a long-term investor. There's so many things inside of the stock market, but you have to identify which one you are, okay? And with that being said, y'all, it wraps up all the modules. If you have any questions, please comment below. You can reach out to me directly. I appreciate y'all locking in to these modules, y'all. Let's turn up, y'all. Let's get this money inside the community. I'm excited to y'all. Rich off options. T, I'm out.